In this video, I will be looking at the Zig Zag Indicator. I will be looking at how we can refine the indicator and apply it to a range of different markets. This is Mark from TradeInform.com and welcome to this video on the Zig Zag Indicator. In this video, I'm going to be looking at how we can refine the Zig Zag Indicator and how we can optimize it for different markets. This is the second part of a video series on the Zig Zag Indicator in which we go from concept all the way to a strategy. This is the second video in the series and there is a link on the screen if you would like to check out the first video. On the screen at the moment, I have a chart showing the Zig Zag Indicator. Now this is a very simple indicator. As soon as the market moves a fixed percentage, or rather retraces a fixed percentage in one direction, the indicator changes direction. When it retraces again by a fixed percentage, it changes direction again. So this is a trend following indicator designed so that you never miss another big trade. On the screen at the moment is the backtest model that I have used to test the Zig Zag Indicator. Now this is a trade-informed backtest model and there is a link on the screen if you'd like more information about these backtest models that you can use to test your own trading strategies in Excel. As you can see over here from these results, I've set up the Zig Zag Indicator very simply. Now I've not included a profit target, I've not included a stop loss. And what I'm doing is simply telling the Zig Zag Indicator to buy whenever we have a rise of 15% from a prior low, or to sell whenever we have a decline of 15% from a prior high. So we've got it set up quite simply, but we can easily change some of these values. So if I was to buy on a rise of 20%, or 25%, we're basically telling the model to test what would happen if we're waiting for a longer period of time to either buy or sell. Now there's no reason why we have to keep these the same. We could always make them different, so we can sell on a decline of 15% but only buy on a rise of 25%. And we can easily change these values to suit what we're looking for. Another thing we can do with this model is change the profit target and stop loss. So I could, for example, set a profit target of 30 and a stop loss of 5. So we've got a 6-to-1 reward to risk ratio. And we can see that it changes the nature of the results. Now we're not doing this to say that this is an optimized strategy, but at least to understand historically what has happened before in this market. So I could change it up to 50, so we have a 10-to-1 reward to risk ratio here, and we can see again that it has an effect on the results over here. So the next thing that I'm going to do is have a look at how the zigzag performs on different markets. And on the screen at the moment, I have a model showing the Qs ETF, which tracks the performance of the Nasdaq 100 index. And you can see here the familiar shape of the Qs, or the Nasdaq 100, decline in the tech bust years of the early 2000s, and the big run-up in prices since 2009. Now I've got the same settings here, buy on a rise of 15%, so I could change this to 20% or 25%. Let's take out the stop loss. And we can see that we get some quite different results. As we've done before, I can have a look at different values of profit target. So I could set this to 500 times the ATR, which is obviously a rather large value. or 50 times the ATR, and we're going to get a different type of trading strategy. And what this is doing is giving us valuable information about how the market has performed. Because the indicator is simple and easy to understand, it gives us useful feedback. If you have an indicator that's complex and use all sorts of different mathematical functions, it may or may not be a more useful indicator, but you can't draw any conclusions about the market itself from what the indicator is telling you. So let's have a look at another market, and I'm going to have a look here at the XLF. Now this is the XLF ETF, tracks the performance of US financial stocks. We can see we've got quite a different pattern to what we had before in either the Qs or the SPY. Big decline here in the financial crisis years, and an on and off recovery followed by a boom in 2016 roughly to 2018. So we've got quite a different market. It seems to go from quiet to loud. So we can try different values, a percentage once again in this, and see what the market has responded to. What I'm particularly looking for is a low drawdown. I want a strategy that is going to keep me on the right side of the big trends, but with drawdown as low as possible. And again, we could look at the effects of putting in a stop loss or a profit target. We can set different reward to risk ratios and see how it affects the trading strategy. Now the final market I'm going to show in this video is the EWH ETF, which tracks the performance of Hong Kong shares. And we can see from the chart here that the market is again a bit different. Now we have a shallower decline in the earlier 2000s and altogether a more jaggedy but fairly consistent upward trend for this market. So looking at the backtest model again, we can see how EWH has performed over time. And we can see that using a 15%, the max drawdown is really quite high. In fact, almost as high as the underlying market. Now we're using Zig Zag to try and firstly to try and understand the market, but also to offer us a lower drawdown version of the market. And we can see as we push a slightly higher percentage, the zigzag here is showing a calmer effect. So in this case, the Hong Kong shares seem to perform better with a larger percentage. Once again, we can test the effect of using a profit target. We can use a stop loss and a trailing stop and see how this affects our trading strategy. In this video, I've looked at how the zigzag can be applied to different markets and how we can change the settings to optimize it for those different markets. In the next videos, we're going to be looking at how we can take the information we've gained from this simple concept, from the understanding we've gained, and convert it into a usable trading strategy. Now, I hope you've enjoyed this video. If you have done, please hit the like button. Please comment below, give me any comments, and also subscribe to this channel for lots more content like this. And for more information about about trading the financial market, and in particular using Excel to backtest your trading strategies, please go to www.tradeinformed.com.